In this ultimate video course, you will learn everything you need to know about candlestick patterns for trading stocks, forex, crypto, or any other financial market. By watching the full course, you will not only be able to trade candlestick patterns like a pro, but you will also gain the edge to profit in both bull and bear markets. So hello guys and welcome to this candlestick pattern trading course. This right here is going to be a pretty long video, so make sure to grab a pen and paper, perhaps grab a coffee as well, and without further ado, let's get started here. And let's begin here by super quickly taking a look at what you can expect to learn from this course. We will start this course off by taking a look at both how to read but also how to understand candlesticks and candlestick patterns. We will take a look at the very basics, but we will also look at concepts like candlestick strength, candlestick momentum, we will take a look at wicks, and much more. After chapter 1, when we have a good understanding of the basics, it's time for chapter 2. And in this chapter, we will take a look at candlestick pattern classifications. In order to master candlestick patterns, it's of course very important to understand, what type of candlestick patterns you are trading, what types do you want to focus on, what types do you want to avoid, and so on and so on. So chapter 2 here is very important, and this will be a quick chapter, because every single candlestick pattern has 3 different categories. Every pattern has a complexity level, every pattern has a direction, and a type. And as I said, don't worry if this sounds a little bit complicated right now, it will be clear very, very soon. In chapter 3, we're going to take a look at the best reversal candlestick patterns. And we will not only look at the patterns, but we will also take a look at trading strategies for every single candlestick pattern. And reversal candlestick patterns are one of the most effective candlestick types. And if you learn all of these patterns, and even more importantly, if you also learn about trading strategies for these patterns, I'm sure you will become a much better trader. And for example, if you take a look at this image right here in the upper right corner, this right here is an example of a reversal candlestick pattern, and we will take a look at that exact pattern and how to trade it in this video, and so much more. But now, in chapter 4, it's time to take a look at the best continuation candlestick patterns, and we will of course also take a look at trading strategies for every single pattern. Understanding continuation patterns is something you pretty much can't do without as a trader, and in chapter 4 I will talk about multiple continuation patterns, including one of my personal favorite patterns of all time, so make sure to stay tuned for that. And last but definitely not least, we're gonna take a look at the doji and the spinning top candles, and these are a specific family of candlestick patterns that is super important to understand as a trader. These are patterns that happens all the time in the market, and they can provide significant signals, both warning signs but also entry signals that we as traders need to be able to utilize. But alright guys, let's get started here with chapter 1. Alright, so before we start looking at all the candlestick patterns and everything you need to know about the actual candlesticks, we of course have to start here with the basics, and that is of course, how do we read candlesticks and how do we read candlestick charts? Well, first things first, we have 2 different types of candles. We have a red candle, which is also called a bearish candle, and we have a green candle, which is also called a bullish candle. Sometimes if you see a black and white chart, it is the green candle that is white and the black candle is red. And the difference between these candles is that during the red candle, the price goes down, and during the green candle, the price goes up. And each candle can represent different time periods. So one candlestick can be, for example, 1 day, but one candlestick can also represent, for example, 1 hour. I'm sorry for my ugly writing here, but I hope you can see. And one candle can, for example, represent 1 minute. And these different time periods right here is what we call time frames. And when you are looking at the chart in, for example, TradingView, you can choose what type of time frame you want to trade. So for example, if you choose a daily time frame, then every candlestick on the chart will represent 1 day. But if you choose, for example, 1 minute time frame, then every candlestick you see on the chart will represent 1 minute, and so on and so on. But to make this example simple, we can think about every candlestick right here as representing 1 day. And now, and this is very important, every single candlestick has 4 different points. We have a high, we have a open, we have a close, and we have a low. And for the red candle, remember that during this candle, the price falls. So the candle opens right here. Or in other words, if this is a daily candle, the open price is the price level at the start of the day. The high right here is the highest point the price reached during the day. So perhaps the price opened right here, it went up all the way up here to the high. Then the next point here is the low. That is the lowest point the price reached during the day. So as I said, the price might start right here, it went up to the high, but then during the day, the price went down all the way down here to the lowest point. I hope you can see, all the way down to the lowest point. And then before the end of the day, the price went up all the way here to the close. So during that red candle, the price might have moved something like this, right? And when you understand the bearish candlestick, you will also very easily understand the bullish candlestick. This is basically the exact same thing, but the opposite. So in this case, the price opens or starts all the way down here. During the candle, the price went down here to a lowest point all the way down here. And during the day, the price went up all the way up here to a highest point all the way up here, and before the day ended, the price came down here to the closing price. So this right here is basically how you read the candlesticks. But we have a few important concepts we also need to learn about. The first concept is what we call a wick or a shadow. And you can see that we have these both at the top, or we can have them at the top and the bottom. And the wicks and the shadows are simply these small lines right here that are either above or below the candles. And these small points show us the highest and lowest point of the period. Or in